Hello, everyone. Adam Bergman here, tax attorney and founder of IRA Financial. And on today's video, I'm excited to discuss IRA Financial's new IRS tax filing services, specifically for all self-directed and solo 401k clients. And super psyched about this. This has been a long time in the coming, but we've done it. And now we are the first company to offer IRS tax filing services, whether it's 1099-Rs, 1065, 990Ts, for all our clients that are part of our annual compliance service for no fee. It's included in our annual compliance service. So we're super psyched about this. So in today's video, I want to explain, number one, what are the annual tax filing requirements for self-directed IRA and solo 401k clients. And then I'm going to tell you about our service and how it can help all of you. And if you have questions, please submit them. You can always give our amazing team of tax professionals a call. We are available 9 a.m. to 6 p.m. Eastern Standard Time. And yeah, we want to talk to you. We actually have a phone number on our website, lets you call. So even if you're not a client of IRA Financial and you have questions, we're happy to help. That's who we are. We like to help people, especially smart self-directed IRA and 401k clients. So let's start with the self-directed IRA. What are the filing requirements for a self-directed IRA? So if you have a full service self-directed IRA, the good news is you don't have to do anything, okay? The IRA custodian, let's say it's IRA Financial, we handle 1099-R, which is a IRS form that reports any type of distributions, contributions, things like that, the IRS needs to know about. So we would handle all that for you, which is great. We also filed a 5498, which is the annual valuation form that all IRAs need to file. That's due by the end of May, and that's something we complete for you. So you do not need to do a 5498 if you're a client of IRA Financial. You have a self-directed IRA, we handle that. Now, if you have a full service IRA and trigger what's known as the unrelated business taxable income tax, or UBTI, and that's triggered in 3 ways. Number one, you use a loan to buy an asset like stocks. Number two, use a loan. And when I mention loan, I should say the loan must be non-recourse. A non-recourse loan is a loan you do not personally guarantee. Why? Because Internal Revenue Code Section 4975C does not allow you to personally guarantee an obligation of your IRA. So not my rule, it's in the code. That's why the loan always has to be non-recourse, whether you're financing inventory or stocks or buying real estate. Or thirdly, if you invest in an active trader business through an LLC, like a restaurant, factory, and there's more than $1,000 in net income, so $1,000 in net income associated with the active business through an LLC, acquisition of real estate using leverage, or you acquire stocks or other assets with the use of leverage, there's more than $1,000 in net income, you have to file a 990T, as in Thomas, and that is due every April 15th. That's an obligation of your IRA, not you. The tax is borne by your IRA, not you. But now, thanks to our amazing IRS tax filing service, we will complete that 990T for you, okay, with no additional fee if you are part of our annual compliance service. So super exciting. Okay, before we had accounting firms and tax professionals we work with. Now we're going to be able to do it in-house, and we can't wait to better serve all our clients. And that was really the the emphasis behind it, is to give all of you better service and more full service feel for all your self-directed IRA and 401k needs. So that's for the full service, right? 1099-R custodian does. 5498 custodian does. If you trigger UBIT, 990T is due April 15th. IRA Financial now will handle it for you as part of our annual filing requirement. And again, all you need to do is part of our annual compliance service. For IRA clients, it's $299 a year flat. For Solo K, it's $399 flat. And I'll talk all about it, but there's no additional fee for this tax filing service. Now let's talk about if you have a checkbook control. Self-Directed IRA LLC. What's a Self-Directed IRA LLC? It's a structure that's become super popular over the last 25 years. really for real estate investors and investors that want more control and also want have limited liability protection, more privacy. What the structure does is it simply uses a special purpose vehicle, an LLC, that's wholly owned by the IRA and managed by you as the IRA owner. And all this is in the LLC operating agreement. So a single member LLC is treated as a disregarded entity for tax purposes, and no federal tax return needs to be filed. That's good, right? Very helpful. But if you have an LLC with two or more parties, whether it's two IRAs, an IRA and a 401k, an IRA and a person, that's treated as a partnership for federal income tax purposes, and a file form 1065, federal and state, must be filed. Okay? We now do it for you. That is due March 15th. Okay? So if you're a client of IRA Financial, you're part of our compliance service, you'll be receiving information in the coming weeks about the 1065 service. Okay? The 1065 is a partnership return. There's no tax, right? An LLC is a flow-through entity. Unlike a corporation where a corp is a big box, it has a corporate level tax and then a shareholder level tax. That's a two-level tax regime. A LLC, taxed as a partnership, think of it as just like an invisible flow-through, right? It's not a box, it's kind of like a funnel. There's no entity level tax, and then tax is paid at the owner level. But since the IRA is the owner, there's no tax, right? Because IRAs are tax exempt under 501, just like charities are. But a Form 1065, as well as the state equivalent, must be filed by March 15th, including extensions to September 15th. It's really an information return, not a tax return per se, because no tax is due, but it is an information return. So it's important to file it. Again, no tax is due, but it must be filed. And now we handle that for you. As part of the 1065 is the K1. And you probably heard that term before. If you've invested in passive forms of investment, you may have even received a K1. And all a K1 does is tells the IRS who the partners, and in the case of an IRA, you'll specifically designate that the IRA is the partner, which is important from an IRS standpoint, because this way the IRS knows the partner is an IRA, and they're not going to start searching for where that taxable income is reported, since they know IRAs do not file tax return. So it's important for an IRA to have that K1 as part of the 1065. It also shows your capital accounts, kind of where you are, your economic relation to the LLC, and the allocation of any profits, losses, income gains, and the like. So it's a part, the K1 is part of the 1065, not a separate tax return. It's a separate form where a copy goes to the partner and a copy also goes to the IRS, but it's part of the 1065. And a K1 is filed for each partner, whether there's 2 or 50,000. Each partner gets a K1. So thanks to the our new IRS tax filing service, we will do the 1065 and the state return for you. So that is super exciting. Also the 990T, right? I talked about it, whether you have a single member LLC, a full service IRA, and a partnership, the 990T, again, needs to be filed in 3 instances. More than $1,000 in net income, if you use leverage, non-recourse loan to buy an asset like stock, non-recourse loan to buy real estate, or your IRA invests in an active trade or business through a pass-through entity like an LLC. If your IRA invests in a corporation like Apple or Coca-Cola, or just a neighbor restaurant that is formed as a C Corp, right, and not a LLC, the C Corp blocks the application of the UBTI, and that's why you probably never heard of UBTI before. If all you generally do, or at least significantly tend to invest in mutual funds, ETFs, stocks, you're not going to ever have to deal with UBIT because they're all C Corps. There's no flow through. But if you invest in master limited partnerships like oil and gas, private equity, hedge funds, venture capitals, private placements in pass-through entities like an LLC, you may have to deal with the UBIT tax, especially if there's more than $1,000 in net income. And the great news is we now handle it as part of our annual compliance service. So you obviously need to let us know, right? That's the important thing. We're not going to know if you have UBIT, right? These are self-directed accounts. We don't know if you're buying venture capital 1, venture capital 6, private placement 2, private placement 8. We don't know the details of every investment. Is there leverage? Is there no leverage? What are you doing? So it's up to you, and that's why we communicate with our clients so you understand the rules, and you can let us know and say, yeah, IRA Financial, I think I have UBIT. I have more than $1,000 net income. Here's all the details you need. You go in our app, you complete all the information, and then we'd be able to file the return for you. The 990T, unlike the 1065, it's a tax return, meaning tax is due if there's more than $1,000 in net income. Why? Because the UBIT tax follows the trust tax rate, which can go as high as 37% at a very, very low income threshold, approximately 15 or so thousand bucks. So unlike your ordinary income tax rate, where you may not hit the highest tax rate of 37 or so percent until you get to like 650,000 K, with a retirement account that's subject to UBIT tax, it follows the trust tax rates, which has a very, very low threshold to reach the maximum tax rate of 37%. So something to be aware of. And that's why, again, I'm like really super excited about this program, because it's going to really, close the loop and make sure the clients aren't missing out on any important, tax filing. So just to recap, went through the full service, single member LLC, multiple member LLC. Full service, 1099-Rs, 5498, IRA Financial will handle if you're a client of IRA Financial Trust. Single member LLC, no partnership tax return because it's not a partnership, it's only one owner. But if you trigger UBIT, there's a 990T that's due April 15th and an extension until October 15th. Multiple member LLC, treated as a partnership. IRS Form 1065 and the state equivalent is due March 15th, extension to September 15th. No tax is due, but the return must be filed along with the corresponding K1 to each partner. 990T, still required even for partnerships, due again April 15th, excuse me, extension to April 15th, only if you have more than a net $1,000 of income. So that's the IRA world, okay? Let's move to the Solo K world. Solo K world, super simple. What's a Solo K? It's a 401k that's essentially suited for businesses with no full-time employees other than owners or their spouses. So if you have a business with no non-owner full-time employees, full-time means 1,000 hours, 2 consecutive years of 500 hours, then you are not subject to the ERISA 401k plan rules, and you can set up what's known as a Solo K, 401k that really is super simple to administer. So why do you want to go solo? Where, just quickly, you can, in 2023, put away $66,000 or $73,500 if you're over 50, pre-tax or Roth options. You can borrow $50,000 or 50% of your account value, whatever's left, use that for anything. There is an interest on that loan. It's a 5-year straight line loan. Interest rate as of January or February, I should say, 2023 is 7.5%. So it's a high interest rate, but the good news is obviously you're paying yourself back. So hopefully that's an option for you. Otherwise, the only other requirements you're going to have for a Solo K are twofold. The 5500 EZ, which is a form that you need to file if you have more than 250,000 K in your plan as of 12/31. So only if your plan assets are above 250K will you have to file a 5500 EZ. Okay, so that's important. If you have under 250K, you do not have to file a 5500 EZ. But now, if you do, nothing to worry about. As part of our annual compliance service, we will help you and actually file the 5500 EZ for you, part of our annual compliance service, and everything is handled by us. Now, 1099Rs, right? Unlike an IRA where the IRA custodian must complete the 1099R, since the IRA custodian is the trustee of the IRA. In the case of a 401k 1099R, if you did a Roth conversion, if you took a distribution, if you did a mega backdoor Roth 401k and converted after tax to Roth, you would also have to complete the 1099R, even if no tax is due. We will handle that for you as part of our annual compliance service. So that's an important form that needs to be filed. Sometimes it doesn't get filed because people don't know about it. If you're a client of IRA Financial, we will correspond and communicate with you so you know what needs to get done. We will do it for you. So this is a really exciting time. I think we've officially closed the loop. We're the only company that offers not only annual consulting on prohibited transaction rules, disqualified person, UBIT, any other matters that will impact your self-directed retirement account. But now we're the only company that will actually do the tax filings for you, the 990Ts, the 1065s, 1099Rs, all for part of our package for no additional fee. So if you pay our self-directed IRA annual compliance fee of $299, which honestly, they probably like 93, 94% of our clients already do, you get this tax filing service for no additional fee. You don't need to go to an accountant and spend $1,000 for them to do the 1065 or $1,500 to do the 990T. We're going to do it as part of our service, no additional fee. Okay. Same with the Solo K. Our Solo K annual compliance service is $399, and that allows us to provide you updated plan docs in the case of a change in law, and provide you annual consulting services on the Solo K regarding contributions, distributions, conversions, also prohibited transactions, disqualified person, UBIT, and we'll also file any 1099Rs, 990Ts, or even if your 401k is a partner in a partnership, we will help file the 1065 for that 401k invested entity. So really, really excited about this. We have a great team of professionals that are going to be working with all of you to help get these IRS filings done. We're going to be communicating with you over the next couple weeks, introducing this. We already have, but more info to come on 1065s and ultimately 990T. So that's really it. Just wanted to introduce the service. I know the audio is a little shaky today. I apologize. I put in my AirPods. I had an issue with my mic. I'm not sure why. I've never had an issue with my mic. I'm going to test it out. It's relatively new mic, so I'm not sure what happened. It's just not my day today. I don't know. But my AirPods are good. I don't think they're the best sound quality, so I am sorry, truly. My apologies. I will be better next time, but I really wanted to kind of get this out there because this is super exciting. Can I still do a Roth conversion for 22? No, conversions for 22 are done. They had to be done by 12/31. You can do it for 23, but you can still do what's called a mega backdoor Roth conversion or even a backdoor Roth IRA. So a backdoor Roth IRA is when you take after-tax contributions of $6,000 or $7,000 if you're over 50 and just convert it to Roth. But that's not pre-tax, right? If you had a pre-tax IRA of 50K, you can't convert that to Roth in 23 and pay tax in 22. You can convert it to Roth anytime you want, but if you do it in 23, you got to pay tax for the 23 taxable year. Where if you do a backdoor Roth IRA or a mega backdoor Roth 401k for 2022, you can still do it in 23 and it counts in 22. The difference is there's no tax. So you're not going to get, well, really won't impact your 22 tax return because it's an after-tax to Roth conversion, so it should not be taxable. But otherwise, that's kind of it. More info to come on our annual IRS tax filing service. We're the only self-directed company in the world that does this for no additional fee. So this is super excited. I'm looking forward to helping our clients stay more on top of annual IRS compliance. Hopefully, this is a service that you guys really appreciate and like. I really think you will. But I'm just super psyched to share it. I wish the audio was better. My bad. It's going to be time. I don't know what happened. Next question. Also, should I take the funds back from the LLC? The conversion be done in the place? No, you can do the conversion in the LLC. Generally, when you convert an LLC, so let's say an LLC has real estate A and real estate B. You can't just say, I want to convert real estate A. You convert the LLC interest. So let's say you have $100,000 in your LLC that you use to buy 2 assets. Okay, and let's say that LLC now is worth 200. If you want to convert the LLC, you're going to convert the interest. So let's say you convert 100. The LLC will be owned 50% by Roth, 50% by pre-tax IRA. You can't just pick and choose what you convert. Okay, you have to do the conversion at the entity level. If you want to convert certain assets, you're going to have to get those assets outside of the LLC and do a specific conversion. But within the LLC, you'll convert the equity, the LLC interest. That's the easiest way. Next question. Can self-directed IRA investment trust have a checkbook control? Oh, yeah. Yeah, you can certainly, we can set up an LLC for the IRA anytime. In fact, I'd say 50, 60% of our IRA clients use the LLC, whether it's for real estate, private mortgages, cryptos, gold, whatever it is. Like some people just want LLC, gives you limited liability protection. That is, it protects the assets outside of the LLC, gives you more control. Since as the manager of the LLC, you can write checks or move money around quicker versus coming to IRA Financial as a custodian. And even though we're quick, still not as quick as you because you control the bank account. And then thirdly, a very underrated reason to use the LLC is privacy, right? If you do an investment in a self-directed IRA, it generally will be titled IRA Financial Trust Company, for the benefit of the Adam Bergman IRA, where in that case, everyone knows Adam Bergman's IRA is the owner, good or bad. If I use the LLC, I can call the LLC, XYZ LLC, and if I form it in Wyoming or Delaware and use a registered agent, no one's going to know who owns it. Now, other states, New York, Florida, you can search who the owners are. You do have some privacy, but not a full gambit of privacy. But if you really want to go all out for complete privacy, yeah, you can set up the LLC in Wyoming, Delaware, and use a registered agent, and it's going to be almost impossible to find out who the owner of that LLC is. So that's a really underrated reason a lot of folks like to use the LLC, not necessarily just for the checkbook control or the limited liability protection. Next question. Thanks for doing the taxes. I had a hard time finding a CPA who knows how to deal with an LLC return. Yeah, exactly. That's what really started us on this path. Obviously, we had to make sure we had the right people that are trained that can do all these returns because it's very specific. Doing a 1065 for an IRA or especially a 990T, a lot of accountants just don't deal with that stuff. It's very niche, very specific. So we're finally able to find the right team to launch this program, and we're super excited about it. And there's no additional fee. So it's going to save you a lot of money, and we'll be able to do it in-house and assist you. So definitely take advantage of it. You should be part of our annual compliance service. If you're not, let us know. We generally send out, information, inquiries like year anniversary when you start. So if you don't get it for any reason, let us know because you should. Because honestly, it's like $299 for IRAs, $399 for solo 401k. Go find an accountant or a lawyer that's going to answer any question or do anything for $300. Possible. Nor should they. We can do it because we have the expertise and we have the scalability with 25,000 plus clients. We have the ability to hire these people and get the work done because we have clients paying us the annual service for all different types of services. So it's a great program. I can't believe we're finally doing it. I've been talking about this thing for years. We as I mentioned, been sending out clients to different accounting firms, and it just hasn't worked well. So now we're going to be able to do it in-house. And we're the first company in the whole space that does this. And I couldn't be prouder. So definitely take advantage of it. If you have questions, let us know. If you have comments, also let us know. Call us if you have questions. Phone numbers right on our website, IRA Financial Group, IRAFinancialTrust.com. You don't have to be a client of IRA Financial. If you have a question, we'll do our best to get you an answer. That's the most important thing is informing everyone, educating people so they know the rules and they can make smart investments. Either IRA LLCs and you have to do partnerships return, we'll do them. There's no additional fees for that. We will do them. So long as they're owned by the IRA. If you have an LLC that's owned by you and your spouse, we don't do personal tax filings yet. Maybe we will down the road. Maybe when we get to 100,000 clients, we'll do it. But right now, it's just specific tax filing for IRAs and 401ks, not for individuals. So we don't do personal, we don't do business tax returns. But if you have a self-directed IRA LLC partnership, solo 401k investment partnership that's owned by retirement accounts, 990T for UBIT, 1099R for solo K, 5500 easy. If you have more than 250K fair market value as of 12/31 for your solo K, we will do it all for you. Just join our annual compliance service. You probably are part of it anyways, but if you're not, definitely want to jump in because you're going to get lots and lots of benefits. So again, really appreciate you guys watching today. My bad on the audio. I know It's okay. It's not great. So my apologies. It's going to be better next week, I promise. And that's it. So again, really excited about the IRS filing tax service for IRAs and solos. And that's it. So last question. I thought you don't have to file with a check for control. You don't. If it's a single member LLC, an LLC owned by one IRA, you have no federal tax filing. You're right, Steve. But if your LLC is owned by 2 or more IRAs, 2 or more people, a partnership return has to be filed, even though no tax is due by March 15th. Okay, an extension can be filed up until September 15th. But single member LLC, you're correct. Multiple member LLC needs to file a partnership return, since the IRS treats a multiple member LLC as a partnership, and it treats a single member LLC as a disregarded entity. So thank you everyone for watching. Really appreciate it. Thanks again, and have a great day. Take care.